Welcome to today's more important analysis videos with me, Rich Perry, market analyst at Hantec Markets. On Friday the 15th of December, there's a slight air of dollar negativity that's come through the markets. There's been a bit of a slight move against in towards a more sort of corrective sentiment on these charts, and that's come as sort of question marks over the progress of tax reform came through yesterday. The sort of senators on the Republican side are a little bit sort of questioning whether they can actually vote for this tax reform, but it'll be interesting to see whether that actually makes a difference ultimately. But certainly the dollar sort of falling back again today as these treasury yields have started to again just drop back, and that sort of reflects this continued sort of ranging of the treasuries on the 10-year side, and the lack of sort of traction in this recovery that we now see in the dollar. So that is sort of reflected through the markets today, with the dollar actually underperforming pretty much across the board. We're also seeing gold slightly higher. So that's generally what we're seeing. We saw also overnight at the S&P 500 closing lower. Now the Dow Jones actually formed a bearish key one-day reversal, and the S&P 500 has actually now closed at the day low pretty much for 2 days in a row now. So the momentum on that move higher on Wall Street has sort of been dropped away, and you can see that coming through on equity markets, sort of basically flat to slightly lower in Europe today. So in terms of what we've got to look forward to today, we've got a little bit of US data this afternoon, nothing really this morning, and the data this afternoon is the New York Fed manufacturing and the industrial production. New York Fed manufacturing sort of slightly lower, which actually would be, I think, a 5-month low on 18.6, and industrial production for the states 0.3% plus. So on the month, and capacity utilization continues to pick up. That would be a 2-year high at 77.2. So that's this afternoon. Now my chart today is Euro Aussie, which I think the Aussie has been a really strong outperformer, and that correction on Euro Aussie, this sharp move to the downside, has actually now completed a head and shoulders top on the move below that support at 54.55, 154.55, completed a top pattern of around about 280 ticks, which gives you an implied target of 52.10 area, which is basically back into this long-term breakout area. These old highs subsequently became sort of a series of lows and highs. So basically that is now a support band. But what you are interestingly seeing now today is this uptrend since July being tested, and also this rising 55-day moving average, which also being tested. So a breakdown below that would certainly, I think, open up this support band and a move towards further correction in due course. So you look at the momentum indicators, you see the MACD lines accelerating lower. Stochastics are now in bearish territory, configuration bearish, and the RSI is the lowest since, well, it's actually gone below that September low today, so it's the lowest since July. So that's before as the uptrend channel was starting. So there is pressure to the downside now. It seems as though that rallies are being sold into. You can see that on the hourly chart, where all these sort of reaction highs are sort of being sold into. You've got negative configuration on the hourly RSI as well, failing around sort of 50-55 area. MACD lines not even getting anywhere near neutral. So yeah, it all seems to suggest sort of selling into strength. So you've got this initial sort of area of resistance around 53.80 to sort of look at, and then you're looking at sort of 54.10 area to 54.40. So there's some overhead supply on a near-term basis, but that neckline of the top pattern comes in at 54.55. So any sort of unwinding move towards that fails, I think, is a chance to sell. So with that in mind, I wish you good luck in your trading today, and I'll speak to you later.